on stage, David.
Thank you very much.
Please go on.
All right. Thanks for the opportunity to present to you today. Bunker Hill Mining Corp. Same guys behind your lanyards that you have around your necks. So very good to be here in Germany, and it's a pretty exciting time for the company. So thanks for the opportunity. Let's see, how do I go forward on the slides? Yeah. Perfect. All right, Bunker Hill Mining Corp. As the name suggests, our flagship asset is the Bunker Hill Mine in northwest Idaho, which has been voted this year by the Fraser Institute the #1 global mining jurisdiction for policy perception. Very, very good place to be. And what makes it even better, and what makes Bunker Hill Mine very unique, is the fact that the mine is on 100% patented mining claims and 100% private land. What that means is that we do not need what most mining companies would consider to be an operating permit. So we do not need an operating permit to get back going, which is obviously a huge differentiator versus other companies. We're not an exploration company, we're a development company, and very soon we plan to be a producing company. We've got the world-class asset, the Bunker Hill Mine, that produced 165 million ounces of silver. We're located in the Silver Valley, that is the largest silver producing region in North America, and I believe second in the world. We've got a new management team. The asset's been around for a long time, and we'll come to the history in a moment, but we've got a new team that came in last year, and we've made a lot of progress, which I'll go through. And we're planning to rapidly restart this mine over the next 18 to 24 months and move into production and restart this prolific mine. On the right-hand side, you have an overview of our capital structure. You can see we're about 75% institutional and high net worth, about 25% retail. Management and insiders do own 7%, and we have a number of name brand institutions, some of which you can see on the slide there, such as Ruffer, Merck, Ixios, but other big institutions we got in, such as Linwood, Extract, etc., in the financing we did last year. About a $35 million market cap today, so certainly relative to peers that will be producing near our production profile in a couple of years, we feel we're greatly undervalued at this level. Oh, I went backwards. All right, so why should you consider investing in Bunker Hill Mining? Well, #1, we have the foundation, which consists of and I'll go through all of these points over the next slide. We've got a new leadership team in place. We've got a world-class cornerstone asset in the Bunker Hill Mine. #3, we're looking to restart the mine in a much different way than our predecessors, in a modern, sustainable way that minimizes our environmental footprint. #4, the strategy is very simple. We're planning to get our flagship asset back into production within the next couple of years, explore for the silver, the high-grade silver at depth, and bigger picture long-term, what we're looking to do is grow the company by focusing on regenerating closed mine sites across North America, and there's certainly quite a few of those that are impaired, if you will, because of past environmental and other reasons. And the Bunker Hill Mine, which has a legacy of its own, will be the ultimate case study that we can achieve that. So #1, the new management team. You see myself there on the third one along, but I'll start with the other guys that came in last year. So this is a team headed by Richard Williams. He's the former Chief Operating Officer of Barrick between 2014 and 2018. He brought with him, when he came into the company, Sam Ash, the CEO, who was Barrick's general manager of their largest scale mine in Zambia, the copper mine, Lumwana. So he actually moved to Idaho. He lives about five minutes away from the mine, walks to work every day. He's on the ground. And lastly, Brad Barnett, who was Barrick's head of closure and rehabilitation. He was in charge of 85 closed sites for Barrick, including multiple Superfund sites. The Bunker Hill Mine was a Superfund site, and so certainly very good fit with that. Myself, I've been in the mining industry for about 15 years on the corporate side, for about 8 of those years, most of which was spent at SSR Mining. So I helped grow that company from Silver Standard in 2013 when I joined to SSR Mining, changed the name in 2014, 2015 as we grew and became a diversified gold company, and then obviously the $5 billion merger with Alacer last year. So looking to bring a little bit of that success here. We all bring with ourselves a long track record of success, and looking to replicate that here at Bunker Hill. So the Bunker Hill mine, very, very briefly, produced for 95 years, prolific mine, third largest silver producer in the Silver Valley, 165 million ounces of silver. A lot of base metals come with that, zinc and lead. It shut down in the early 80s, not for economic reasons, but for environmental ones. It was an environmental disaster. You can see on the second picture there wasn't a single living tree in the Silver Valley when this thing shut down. So the Clean Air Act came in, and the Clean Water in the 1970s. There was an on-site smelter, a zinc plant. There was no hope that the former owners were able to continue, and that's a good thing. It was an environmental disaster. So the EPA, the Environmental Protection Agency, stepped in. It took them 35 years to clean this up, put in $200 million. That cleanup ended 5 years ago, and the mine's been on care and maintenance since then. So there's a couple of management teams that rotated through before us. Didn't really move the asset forward, but one of the good things that they did do was they settled with the Environmental Protection Agency to ensure that the future owners of this mine, which is now, well, we'll come to that, it will be us very, very shortly, will not be responsible for any of the environmental damage that happened over that 100 years or the cleanup period, which is huge, which is effectively a green light to move things forward. So since the team's come on board, we have done a lot of things. We've digitized that 95 years worth of data. We've published 2 43-101 compliant resources. We've published 2 PEAs, including an upgrade that we did a couple of months ago. And we have actually quite recently, and we'll come to this slide, entered into a joint venture in Colorado in a past producing gold district, which is pretty exciting as well. So just a little bit about where we are located. We're on the far western extent of the Silver Valley. You can see Hecla's Lucky Friday on the right-hand side, American Gold and Silver's Galena. Those are the main operating mines in the valley, a number of closed mine sites. You can see at the bottom left there a little bit of the scale that the mine's footprint has. It's a massive mine. It is the largest mine by tonnage, 5,800 acre land package, of which 900 acre footprint of the mine itself. And as I'll come to on this slide, it remains the shallowest of the major mines in the Silver Valley. And so why that's exciting is because, as you can see on the page, we produced 165 million ounces of silver down to the 4,000 foot below surface level. And there's no reason, again, the reason the mine shut down is not because the veins weren't opened at depth, it was for environmental reasons. And so we believe that there's at least 165 million ounces below the 4,000 foot level, like there were above it. So we'll see when we get down there, but that's certainly one of the exciting silver, high-grade silver upsides. You can see Lucky Friday all the way down to 10,000 feet. So certainly a much deeper mines in the Silver Valley. And the good news is we'll come up to that 4,000 foot level, we have an 11-year mine life. So we have an 11-year mine life just to get down to the where the historical workings ended, and then it's certainly blue sky from there. Very quickly on this slide, and this stands in stark contrast to the environmental disaster that happened 40 years ago. So as we restart here, we are really looking to ingrain ourselves in the community, and that of Kellogg. So the Bunker Hill mine is in a town called Kellogg in Idaho, which has about 2,000 people. It's right off the interstate highway, excellent access to regional infrastructure, labor, etc. And so as we start up the mine, which has tremendous local support, we're looking to do that in a very environmentally friendly way with a low footprint. So some of the ideas and some of the things we're moving forward through feasibilities, including a waste-to-energy plant, with the municipal waste that is normally shipped to Montana being the source feed for that, and with the Bunker Hill mine being the end client. So quite a unique solution to create more jobs locally and to reduce our footprint. A 4-ton-a-day biochar production plant as well. And I mean, we're looking at housing developments, golf courses. And to be clear, we're not funding a golf course or anything like that. We're working with local partners. We are a mining company first and foremost, and that's where our capital allocation is focused. But along the way, there's these opportunities to work with partners to improve things in the community, create jobs, and just create that social license, which, as we all know, is extremely important to move a mine forward. So the PEA, the most recent PEA, and we upgraded it, and we'll come to a slide on that in a moment. You can see the headline numbers there, $143 million NPV, 35% IRR, 2.5-year payback. The really important number, they're all important, but the really important number is that bottom left number you see there, that $44 million of initial CapEx. So very low capital cost to get this mine back up into production. You may be wondering, well, why so low? And the reason why is we have 100 years worth of infrastructure underground that's still there. So we've got hoist rooms. One of the hoists itself is still operational. We've got thousands of miles of tunnels underground. We've got shafts that are still partially operational that need to be rehabilitated on the way down. So we certainly need to do some rehabilitation and drifting and capital development, but the mine is in very good shape. There's still surface buildings there. There's certainly not a smelter or a process plant. That was all remediated by the EPA. So the majority of that $44 million is to buy a new process and install a new process plant. 11-year mine life you can see there, and $25 million over 11 years, $25 million of free cash flow at the mine level. And you may be wondering, well, what metal prices did you use? Pretty conservative, we think, metal prices. $20 per ounce silver. Obviously, that's much lower than silver today. $1.15 zinc. A lot of the mine plan is zinc, and that's just because we haven't delineated the rest of that silver out. Versus $1.50 zinc, so $1.15 versus $1.50, so certainly big discount there. 90-cent lead against $1.10 lead in the market today, so a lot of upside. That $25 million of free cash flow is probably closer to $35 to $40 million after you factor in today's spot prices. Again, keep in mind where our market cap is at $35 million today. Last minute? Okay, perfect. I'll skip over this slide. This shows you the improvement between the PEAs. I'll skip over this slide as well. The key on this one is that the mine is flooded below the 11 level. It's going to take about 18 months to dewater the mine. The good news is we've got 3 years of mining above the water level, and then we can mine downwards as we dewater the mine. So this is probably my favorite slide in the deck. This shows that $143 million NPV that you saw on the previous slide. And then when you put those spot metal prices in, you can see that the NPV increases to over $300 million. So here we are with a $35 million market cap and against a $300 million NPV of the mine. I'll skip over this just because I'm very much running out of time, and I will move straight to the end and focus on what are our catalysts. Why should you consider investing? There's some pretty huge catalysts here, and we're looking to realize these all over the next couple of months. So number one, we are discussing with the EPA a restructuring of the liability that we have with them. We have a $19 million liability. There's no bonding, no environmental, but we do have a $19 million financial liability that we're looking to defer into the period when the mine is up and running. The reason that's so important is it will allow us to buy the mine. So we actually don't own the mine. We have an option to buy the mine. The purchase price is preset. You can see it on the page there, $3.4 million of cash. It'll be very straightforward to do that, but you do need to be in compliance with the EPA in order to be able to do that. So the dominoes that will fall here, we're hoping over the next couple of months, and we've been working all year on this, settle with the EPA, buy the mine. Of course, you need the money to buy the mine. So I've been working for 6 months on a project finance process with Cutfield Freeman, the preeminent mine finance advisors, to raise a non-dilutive, low cost of capital package to fund that $45 million of restart financing in a non-dilutive way, and then minimize the amount of equity that's needed to restart the mine. So if things go as we think they will in the next couple of months, you could see press releases on all 3 of those top 3 items, and that will enable us to move up our exchange from where we're currently listed on the CSE to the TSX Venture, which obviously will continue to improve our liquidity and draw further investors. And I won't touch on all the bottom slides. We've got lots of exploration upside and advancing the project. So it's a pretty exciting time for the company.
Thank you, David. Yeah, this was fast. I think one question. Yep.
What's the average production cost you estimated for the ounce of silver?
Per ounce of silver, it is about $13 an ounce on a silver equivalent basis. We also express it on a zinc equivalent basis, which is about 47 cents per pound. So it's that bottom quartile. Certainly,
this is all in? AISC?
All in sustaining cost, yep.
Okay, great. Thank you very much.